LBR LBO Debrief, Business Climate Outlook of 2016.
Thank you so much, Dr. Terry, for that presentation on what we can expect in the global economy and also certain interesting aspects of Sri Lankan economy. I believe there are tax officials and finance minister officials are here. She mentioned about three important trends: rebalancing of Chinese economy and slowing down of Chinese economy, and the long-term long period of lower commodity prices and normalization of U.S. economy. The challenge to us, we as business executives, okay, what these things matter? What are the implications of our own industries? And if the U.S. interest rate is going to go up, what will be will there be a capital flight from us? What will be the impact on our capital markets? What will be the impact on our interest rates, etc.? So these things will, the discussions will evolve during the next, couple of presentations. You also might see a certain amount of repetition, in these presentations. Speakers will revisit some of these areas Dr. Terry mentioned, because some of these areas are so important and there are different perspectives, and so you will see the discussion getting evolved on most of the similar themes. I would like to warn you that most of the presentations are data heavy, they are data rich. Okay, that is because you need data. We believe in evidence-based policy decisions, evidence-based business decision making. So data is important. So sometimes you might not be able to absorb all the data, but the challenge is what is the trend, what is the big story, and how it is going to affect our businesses. Our next presentation is going to be on key markets, primarily on UK, EU, US, China, Japan, and Middle East. Certain markets traditionally important for us. So to take us through what we can expect in these markets, I would like to invite Senior Country Economist of World Bank, Ralph Van Doorn. Ladies and gentlemen, please welcome Ralph.
LBR LBO Debrief, Business Climate Outlook of 2016.
Hello, good morning, distinguished guests at this conference. So this presentation will be about some of the key economies, the challenges and outlook, some of the key economies in the world, and those specifically for Sri Lanka. And we look at one kind of structural development in the global economy, which is the Trans-Pacific Partnership, which is something that has been catching the headlines in the last few weeks. It's inevitable that some of my presentation will overlap with that of Dr. Terry Quintatse. At the same time, we are very much in line. The World Bank is very much in line with those outlooks. So let's first start with which economies are we going to look at. So one way is to simply ask ourselves, well, we know who are the usual suspects in the global economy: US, the countries of the Euro area, Japan, UK, and China. So we're going to look at those. But at the same time, are these also important for Sri Lanka? So one way to look at it is simply to ask ourselves, how important are they as providers of foreign exchange, which is something which this year, with the rapid decline of foreign reserves, is a very important way of looking at the importance of these countries. So what do we see? Well, first of all, what are the major sources of foreign exchange for the country? Obviously, garment exports, kind of in order of declining importance. Garment remittances is a single largest source of foreign exchange. Garment exports, tourism, tea exports, official financing, foreign direct investment inflows, and portfolio investment, meaning purchases of treasury bills and bonds, and the issuance of euro bonds in the global financial markets. So if you look at the origin of these financing flows, we see that indeed the US, UK, and Euro area are systemically important countries for Sri Lanka. if you look at the sources of what they provide, well, all three are major importers of garments, whereas also the euro area is quite a significant source of both tourism and remittances. Actually, the third or fourth largest source of foreign financing is Saudi Arabia through remittances. China is also important, not through remittances or exports, but mainly through official financing, as we all know, a lot of infrastructure financing, but also increasingly tourism. I mean, China has really, in the last few years, doubled or tripled its number of arrivals, which makes it a very rapidly growing market. Japan is mainly important through official financing. India, which will be discussed by the next speaker, tourism and remittances. The Middle East is primarily UAE and Qatar remittances. And if you look at just simply at the sector of tea, which in its magnitude itself doesn't make it seem like a systemically important sector, but given the role of tea in the economy and employment, these are important sectors to look at. It's mainly Russia, Turkey, Iran. So we're going to look at a number of those countries, both the kind of the systemically important countries in the world, and a few of the countries that are really important for Sri Lanka. So what are the main messages? I believe that very much align with the previous presentation. We do see a recovery of the major high-income countries. Recovery setting the bar quite low, but it's better, we believe, than 2014. Driven increasingly by domestic demand in the United States. Employment conditions are improving. In the euro area, we see signs of credit growth and declining unemployment, again, from very high levels. In Japan, we see a more fragile recovery, despite the three-arrow policy package, including a very strong monetary policy stimulus. In China, of course, we see data. China is changing its growth model, less investment, more consumption-oriented. The slowdown is has become more pronounced, but so far, despite a bit of turmoil we saw a few months ago, it has remained orderly. What we see is that external demand coming from emerging markets has weakened. And as a result, 2016, our projections for 2016 that we will publish in a month from now will be a bit lower than we projected early in the year. So although we see a picking up of activity in the major economies, the pickup is a bit disappointing and slower than we expected half a year ago. The big buzz is about the tightening cycle of the US Federal Reserve, and it seems to be coming really soon now. At the same time, we see a divergence because, if anything, in the euro area and Japan, they're doubling down on more monetary stimulus, especially the euro area this week. Remittances generally expected to recover, but the risk of low oil prices will remain. And Trans-Pacific Partnership is amongst the many of the dynamics that will happen, is that non-member states, especially those specializing in apparel and textiles, they may face a lot of competition from Vietnam, which is a member, in accessing major TPP markets. And we understand that's also on the mind of the political leadership. So in terms of the numbers, what we see is the line on the top, China is expected to slow down, but still a very respectable growth rate of around 6.5%. The purple line at the bottom is Russia, is going through a very deep recession, and the recovery is less fast than expected. What you're looking at is the June 2015 projection of the World Bank, as we expressed in our Global Economic Prospects publication. Next month, the January 2016 publication will come out, and there will be some revisions to this, but I'm not allowed to show them. But generally, we see that compared to these projections, they will still show, as I said, the recovery, but the projections for the US, UK, Japan are a tad lower. Projection for China is slightly lower than this. For Russia, 2016 they're still going to be in a recession, is what we believe. But our projection for the euro area is a bit more positive than we expected 6 months ago. Some more detail. What do we see is happening in some of these key markets? So if you look at the United States, growth has been supported by consumer spending and investment in 2015 and expected to remain above potential. Although unemployment rates have declined a lot, partially it's because also labor participation has declined. So a lot of long-term unemployed have left the labor market. This will constrain potential output growth. So in a way, it's being above potential, but potential itself is a bit lower than before the financial crisis. We see a lot of exchange rate action against the US dollar. So the US dollar in the REER, which is the real effective exchange rate, meaning the exchange rate of US dollar against a trade-weighted basket of currencies of its major trading partners, we see consistent appreciation, which has had this effect on exports. So in a way, it's the driver of growth in the US has moved from exports to consumer spending and investment. Now, given these trends, although we expect a rate hike as soon as this month, we also believe that the trend of declining exports and its consistent trade-weighted appreciation may induce the Federal Reserve, the central bank of the US, to not hike too fast. So there would be a bit of a moderation on it, which ultimately could be positive for Sri Lanka. If we link this back to Sri Lanka, a big concern for capital flows is going to be the interest rate differential between the United States, which is one of the investment options for many investors, and the Sri Lankan key interest rates. So the faster the interest rate in the US would rise, the more attractive or the less attractive in relative terms Sri Lanka becomes, and the more capital outflows we may experience. So this is a risk that Sri Lanka will have to look at. If you link this back to the budget, given the lack of fiscal consolidation, this means a continuous reliance on borrowing at a time when global financial conditions are becoming tighter. So this is worth keeping in mind. Fiscal consolidation is needed, given partially given the tightening global financial conditions, and also partially given the high level of debt in the country. If you look at the euro area, we see also a recovery supported by strengthening domestic demand and exports. The euro has depreciated a lot against the US dollar. We see a pickup of credit and intra-European trade growth, again, supporting this recovery. Deflation concerns have receded, but core inflation and wage growth are quite low on a euro area-wide level. And again, this has been confirmed by the news articles where continuous monetary stimulus may be coming in. We also see that there's a wide disparity amongst the member states of the euro area. There are countries in the top left which have a very high, so where employment, 80%, meaning long-term employment as a share of total unemployment, is very high in Greece, which is also suffering from deflation, all the way down to the bottom left, which is Finland, which has low long-term unemployment and positive inflation. I guess some of the key message from here is, given the importance of the euro area as an export destination for Sri Lanka, the euro has depreciated by a lot against the US dollar, whereas Sri Lanka for the first 8 months of the year was pretty much pegged against the US dollar. So it means that in real terms, there's been a very large appreciation of the Sri Lankan rupee against the euro. So in that sense, the depreciation that was started early September of the rupee against the US dollar is also means to some extent restoring the exchange rate against the euro, which is a positive trend and which hopefully will support exports. Now, having said that, the low growth rates of the US and the euro area, even though picking up. These are your major export areas. Exports are not going to grow much faster than the growth rate of these countries, of these areas. So it's important. The important message from this is that Sri Lanka also has to look for new export products and new export destinations, or add more value to its exports, for example, to tea. Exports has been falling as a share of GDP for many years now, and structural reforms in export sector are needed to make exports go up. And continuous reliance on the euro area and US also means upgrading your export basket. If we look at Japan, we see a fragile recovery. We see skills shortages in key sectors. At the same time, increased female labor participation may help offset some of these pressures. The long-term inflation expectations remain below the 2% inflation target, despite further policy easing by the Bank of Japan. If you look at China, of course, the big story in China has been the rebalancing of the economy away from investment-led, export-led growth into more consumption-led growth. And indeed, we see a rebalancing. Whether you look at GDP or employment, we see a bigger role of services in the economy at the expense of industry. So we do see this structural shift in China is happening. At the same time, it's not happening without any lack of turbulence. And we saw the stock market drop a few months ago. We've seen the devaluation of the yuan. But we do think that the scope for further turmoil may be contained, primarily because they still have a lot of foreign exchange and a current account surplus. So they're shielded to some extent, hopefully, by any global turmoil resulting from global financial tightening conditions. Now, going a step away from the key global economies to the Middle East, let's look at the three major remittance providers. Despite the continuous low oil prices, the World Bank is still relatively positive on the prospects. We believe that growth in Saudi Arabia, UAE, and Qatar is going to hold up and possibly even increase in 2016, supported by public investment in UAE in preparation for the Dubai 2020, a big public investment in Qatar, and Saudi Arabia ramp up of oil production. At the same time, low oil prices will remain a risk for these countries. At some point, if it stays low for too long, it will hit their capacity, for example, public investment. Remittances, although we are positive about the recovery of remittances in 2016, there's a risk for low oil prices. To look at Iran, the world is quite bullish, but I cannot show the numbers yet. But we expect a growth rate of about 6% in 2016, supposing that all the sanctions are lifted. So there will be a huge pent-up demand in Iran. Whether that means they're going to drink a lot more tea, well, that's we hope for Sri Lanka. The big structural shift on the horizon is a Trans-Pacific Partnership. We're not there yet. On October 4th, the countries around the Pacific Ocean concluded negotiations, but it's not yet ratified, and especially in the United States, it's becoming it's not yet clear-cut how the politics whether they would vote for it. Initially, we see the countries that joined, but it's probably you can also think about who didn't join. We don't see India, we don't see China, we don't see Sri Lanka. So is it an opportunity or a threat for Sri Lanka? Well, first of all, what is the TPP? It's more than just a free trade agreement. If anything, tariffs and non-tariff barriers generally are already quite low between all these countries, and they do trade already quite a lot. So what's important about TPP is what's there beyond free trade. And from what we understand about it, it's going to be focusing on investment activities, which would induce or help support more global production networks, treatment of intellectual property, behavior of state-owned enterprises, and labor and environmental standards, which would be upgraded. So those are areas that you may think about, okay, suppose Sri Lanka would join, what would be the impact? If you look at, it's not the only free trade agreement. We see a lot. We see the free trade agreement of the Asia Pacific, the really comprehensive economic partnership. And again, the one missing out is Sri Lanka. We do see the Prime Minister and the Finance Minister in the recent speeches mentioning free trade agreements, bilateral ones with the US, Canada, Australia, South Africa. But what we see that we don't see yet any, at least publicly and officially, any approach to these free trade agreements. So would it be good for Sri Lanka to join? I mean, there are two ways to look at it. Defensive and in a positive way, we would think. Well, first of all, what do we think TPP is going to do? Well, TPP is going to, we believe, is going to increase member country GDP, not necessarily through a lot of increased trade, because it's already quite high, and tariff barriers are quite low, but on the services side, and barriers to investment may lead to increased productivity. Small economies in the TPP, think about Vietnam, Malaysia, may actually, and more protected ones, may benefit the most in terms of GDP growth from this arrangement. There could be positive spillovers into non-member states to the extent that there will be a streamlining of barriers to investment and harmonization of non-tariff barriers. So basically, the TPP may create global public goods that may benefit everyone. But on a very direct sense, we do think our simulations show that given that Vietnam, as a major garment exporter, will have greater access to, say, the United States, it may lead to greater competition with countries like Vietnam, Cambodia, and Bangladesh, who are not members. So that's kind of the defensive way of looking at the TPP, and I believe the Prime Minister mentioned that in his policy speech as a threat. There are other impacts that could be more like opportunities. It's increased market access. If you were to join, there could be a lot of the agenda for structural reform as expressed by the Prime Minister and also the Finance Minister actually is in line with membership of TPP. It means reducing import barriers. It means different behavior of state-owned enterprises. It probably means increasing revenue, because if you reduce your tariffs and your para-tariffs, which is a major source of revenue for Sri Lanka, you have to reform your tax system. So a lot of the agenda could be aligned potentially with that of Sri Lanka. So it's worth thinking about that. So thank you very much. To have more information about the work we do, we have our own website of the Sri Lanka country office where we look at Sri Lanka itself. In January 2016, we will come up with a new global outlook and challenges and look at the TPP, which will be downloadable from the World Bank website. And if you're interested in remittances, we have our October outlook where we look at the global outlook for remittances. Thank you very much.
LBR LBO Debrief, Business Climate Outlook of 2016.